Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, being halfway through the year, I thought that I might take a moment and see where things stand as far as the ability of our SVA methodology to steer you through the churning waters that we have recently experienced. Indeed, I went back over the last 12 months to review how well or poorly SVA has performed. As it turns out, it has been quite a remarkable year for those who follow the dictates of structural valuation analysis. But before we take a close look at what happened since July of 2020, as always, I do like to say thanks again to everyone who likes this video and all our subscribers. We really appreciate every single like. Okay, well, let's start off with the big boy, Amazon. And what happened in the past year? Well, as it transpires, virtually nothing. Amazon went virtually dead flat straight through the entire year. Now, from the extreme bottom at the beginning of July to now, as it transpires, it's hard to see it on this chart, but it actually was up 28%. But by and large, nothing much happened to Amazon last year, and of course, it was not one of our favorite stocks by a long shot, was it? The same thing with Netflix. Again, a pretty flat year. And of course, from a fundamental point of view, as well as an SVA point of view, this is not a stock that I have cared for whatsoever. Apple, we had quite a year with Apple. It started off nicely enough, and we had that lovely run up to, that actually was September the 2nd of 2020, at which time, by the way, virtually all of the FANG stocks hit local peaks and then set back. In this particular case, that peak happened to be precisely at its HB5. You can't see that anymore. And that's because the stock repurchase plan that Apple has been following, or was following at the time, happened to coincide this point with the HB5. And at that point, we had said enough, and we got a nice setback. Where did it set back to? Well, down here to its HB4. So we had a nice gain, and then we saved quite a bit on that loss, and I held the stock pretty much all the way through various, by the way, gyrations of the balance sheet following all of their buybacks and so on, until the shares broke support at its HB5 fairly recently. Now, of late, of course, this stock has turned around and has had a nice rally, as, by the way, I did suggest might well be the case if the S&P 500 did reach back up to its expected high at its low super growth price. And that is exactly what has been happening. Alphabet, well, that's my favorite stock, and it has been for a long time. It started off the year, by the way, with a lovely run up to the mid-super growth price, and we forecast a setback. We got one back down to its low super growth price. I said, listen, take your heart in your hand and just buy it. Well, that stock has had a gorgeous 85% run since that time. And you even might have made a little bit of extra money here had you gone short the stock on that setback. But I have not necessarily recommended that as as something that you might do. But you should keep that very much in mind. Facebook, kind of the same thing as Alphabet in a way. We started off the year and nicely, went right up to its bubble price at 7.4 times book value, which was the high last set in 2018. And at that point, I said, sell it. And a good thing, because that stock had a nice setback. In fact, adjusted for the growth in the balance sheet, it had a 14% setback between the time that we issued a sell and the time I said, okay, time to get back in again, the stock again. And since that time, it has been moving up nicely, of course, driven by those rising earnings and fair market value. So it's been a very, very good year for Facebook. Microsoft, well, you know what I felt about Microsoft all the way along. I really am almost indifferent to it, except that after months and months and months of sort of floating along that HB2 price, which is 12 times its book value, I finally decided, well, if that's what you're going to do, I'll just put you in the Phantom FANG portfolio, and what the heck, we'll just go with the flow. Well, it's done nicely since that time, and in fact, recently it's done very, very nicely. But by and large, the performance of Microsoft has not been terribly interesting. Finally, Nvidia. What can I say about Nvidia? How can I wring my hands any further about this stock? It started off well enough. We got a nice sell signal back here in February. The stock took a nice drop to its HB3. Okay, that's 16 times book value, and rallied nicely to the HB4. That's 20 times book value, at which time I said, okay, take your profits. And happily enough, the stock set back, but it didn't set all the way back to the HB3 again, and therefore give me a nice clean buy signal. And since that time, I basically, I wouldn't say been faked out for it, but this stock has continued to move, and I simply haven't been there. Part of the reason, of course, is, I was looking at the industry fundamentals and some of the industry comparisons, and they looked awful. Maybe I took too much of a cue from the industry and not enough from SVA. Anyway, in summary, in the last 12 months, the S&P 500 gained 37.4%, and the NASDAQ 100, which includes all of the FANGs, gained 62.3%. So the market itself set a high bar. Interestingly, the FANGs overall outperformed the S&P but underperformed the NASDAQ 100. The FANGs gained 53.75% if one had done nothing at all with them. So we had a relatively tall hill to climb when we set out 1 year ago. Starting with Amazon, I had a relatively easy time. The shares rose by 29% last year, but I did not hold the shares for a lot, indeed most of that time. Furthermore, the stock actually reached its peak on September the 1st of last year and did almost nothing since that time. As far as Netflix is concerned, I simply avoided the stock all year. It too reached its 12-month high at the beginning of September 2020 and has done nothing at all since that time except lose money. Apple was a trickier proposition. That stock also peaked in early September, where I traded out of the stock at its HB5, 26 times book, but not before a nice 37% gain that far since the beginning of June. I then traded out of the stock at its HB5 and back in at its HB4, and I held it until I got a sell signal when the shares broke their HB5 this April. That gave me another gain of 14%, for a total overall gain of 51% for the year. Now, I have missed the rally back towards the HB5 price very recently. In fact, I would have made 51% versus the 60.7% overall gain that it actually made for the 12 months. In fairness, however, 4 weeks ago, I did give you a heads up that I thought that if the market were able to stage a gain to our low super growth price, okay, that Apple would likely go to its HB5 price once again. And it almost has. Now we get to Alphabet, which has been a favorite of mine all year. Not only did the shares gain 83.7% for the year, but I managed to get in an extra trade out and back in again for a potential additional 14% on the short side for the truly aggressive investor. Facebook gave us 54% overall, about dead on the overall FANG portfolio performance. But by trading out of the shares at their bubble price and back in again at their mid-super growth price, that's 5.5 times book, we should have added an additional 14% for an overall gain of 68.9%, which was just a hair above the NASDAQ for the year, but well above the average FANG stock performance. Microsoft is a stock that I have been very ambivalent about, and I still am, to be honest. However, all by itself, it gained 42% for the year, and I finally realized that it was going to hang on to its HB2 price. Okay, that's 12 times book, so I belatedly added it to the Phantom FANG portfolio. I think that it's been running about neck and neck with the S&P ever since that time, so I'm going to call this one a weak draw. Finally, Nvidia simply defeated me. Although I did get one excellent trade in, out of the stock, back into it, and then back out again. It unfortunately never did decline to my hoped-for target low recently, and I have basically missed the entire gain from May of this year and on. That was the big winner of the FANGs, by the way, at plus 91%, and I only managed to get a modest piece of it. Perhaps I was paying too much attention to the other semiconductor stocks, which have performed very poorly in recent times, and certainly so compared to Nvidia. Well, anyway, overall, in sum, we avoided the problem stocks during the year, Netflix in particular, but we did not hold Amazon for a lot of the time, and it also went nowhere. They were the two stumble bums among the FANGs. Microsoft was also there, just kind of tagging along. My big winners, and the big winners among the FANGs, were Alphabet and Facebook, and to an extent, Apple as well. Nvidia was my personal bet noir, but when I achieve perfection, I'll let you know. I can't claim that any of the performance of the Phantom FANG portfolio that we got was due to my personal brilliance or stupidity as an investor. I simply followed the dictates of the structural valuation analysis as well as I was able in real time and in front of all of you. I did absolutely nothing that any of you could not have done personally if you were given access to the tools of SVA to help with your decisions. As a result, we have had a good year, both relatively and absolutely. Now, your takeaways this week are, first, the FANGs still look to be leading the market higher, and that is pleasantly bullish, as the upside target for the S&P 500 is still about 15% higher than today. Not, I think, that the FANGs themselves will achieve new valuation highs, but their leadership may well inspire investors to remain confident and optimistic. Second, as I noted last week, that should be enough to lead the S&P 500 back to its valuation high last seen in 2000, after nearly 3 months of consolidation, meaning going nowhere. The S&P looks as if it's heading higher. So as I said last week, I would not be strapping on my parachute just yet. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday. Have a bullish week.